The Central Bank of Nigeria, through the Monetary Policy Committee, yesterday lowered rates by 2% in a bid to get banks to lend more and, in turn, encourage development in sectors such as infrastructure, solid mineral resources, agriculture, and the real sector. We will be looking at the subject of the cost of lending. And for that, I am joined by Akin Oyebode, Stanbic IBTC's Head of SME Lending. Welcome to the show, Akin. Yesterday, you did hear the CBN governor speaking about the fact that we will cut CRR for businesses, and if you find someone who is in this particular spaces which we've identified, you bring that proposal to us, so that we will disperse the portion of CRR that is available to you, and also cutting MPR. Does this change your disposition as a lender?
Thanks, Tunji. Thanks for having me, and thanks for the question. I think you've got to recognize that financial intermediation needs two main activities. So it needs the acceptance of deposits, and then it needs a lending activity. So by definition, deposit money banks are there to take deposits and lend. So I don't think it materially changes why we wake up in the morning. We will still lend. And indeed, I think it's still down to the ability of individual banks to underwrite that risk. So if you've got the capabilities to lend, say, in mining, then you'll do it with or without a CRR adjustment.
Yes, exactly.
So yes, it might affect pricing, perhaps, but I think that it's not necessarily going to de-risk the sector. So if we take mining as an example, we still struggle with understanding the quality and quantity of deposits. So yes, you've got a tin asset, right? But you can't say what type of tin is in there, what quantity is in there, and you certainly need the infrastructural support. So I always say mining, if you've not got power, if you've not got water, it's a fairly difficult gig
to play it.
Yeah, so I think that one of the things we should be focusing on is unlocking the structural defects in those sectors, which we'll see capital will easily go where it gets the highest returns.
I mean, one of the thoughts yesterday was that if with the MPR being cut, rates will go down. We know, and we've seen over time, that this doesn't necessarily happen. But the question would be, what exactly determines a bank's, a credit's rate? I mean, if somebody comes to you and says, I need credit to do X, Y, Z, and the bank looks back and says, okay, we're going to charge you 12% or 13%, what are the factors that are going to determine the rate?
I mean, I think the most important factor is your risk-free rate.
Exactly.
So you find that the rate at which government borrows is a critical flaw, right? And that in itself comes out of where inflation is going. So if government were to, if government were to borrow below inflation, it means adjusted for inflation, my real returns are negative, right?
True.
So as long as inflation is above 9%, you're going to find that government has to borrow at double digits, right, to source. And the wider the deficit is, then the more expensive government borrowing
is going to continue to be.
So that's your risk-free rate. Now, on the back of that, a bunch of things are loaded. You have things like your reserving costs. You've got things like your liquidity constraints. You've got things like your cost of doing business. So as long as you're all using generating sets, as long as you've got to drive to Papa Jao to check that your borrower is doing okay, there's a cost of credit. And then, of course, there's that little hole which we mainly refer to as the risk premium, which is the risk assigned to that client. So you'll find that when you're a corporate name, audited financials, strong corporate governance, an independent board, you've been around for 20, 30 years, the risk associated with you is a lot less than the guy who sells motor spare parts in Owerri. Because if that guy decides to stop selling spares, that business is done. There's key person risk, there's no board oversight, there are no financial statements, there's very little national identity system. BVN is obviously helping with that. So there are a bunch of things that you need to put in place. And of course, the fact that when there's a default, it might take you years to resolve that through the legal system. So there are a number of things that we can do to de-risk the industry. And I think that that's where...
I mean, that's the next question I was going to ask you, because you said it critically. I mean, that's why you wake up in the morning to go to work. And I mean, your office is into lending to SMEs, and you're thinking about how can you, get to do your work properly. So what do you think would make your job more efficient? If X, Y, Z were put in place, this will make sure that I'll be able to lend to a lot more SMEs in Nigeria.
So, I mean, I think that I'm a big advocate of a movable asset registry, and I've been an advocate for a few years. And I think that if the Federal Ministry of Industry, Trade and Investment beds that, I mean, it'll be a massive help. And what does that do? A movable asset registry enables you to take a charge on assets, on movable assets, primarily of non-registered entities. So if you're an enterprise, right, where you're not a limited liability company,
yeah,
or you trade in your personal name, it allows lenders to take a charge on your asset. And not just lenders, it allows you also do some form of peer-to-peer lending. So I'll give an example. If you, for example, supply cocoa beans to Cadbury, but you've got to buy those cocoa beans from a farmer, you can go to that farmer and say, look, I've got a contract with Cadbury, right? This contract is worth ₦1 million. The farmer takes a charge on those receivables, right? And says, well, I'll take a charge on the receivables, we register it, we put it in the registry, it's there for all to see, and then you supply Cadbury. Cadbury is forced by that contract, by that charge, to send your receivables to that farmer when you get paid.
Yeah.
Right? So you find that just opening up a movable asset registry could help you unlock billions in receivable financing, in especially the agricultural sector, in things like solid minerals, because now your license can be used as collateral, because I can take a charge on your mining license, right?
And if you do not pay, I could just take it over.
Take the license.
So I'm going to ask you the final question. What are your rates?
So, I mean, rates, I don't think that's a fluid question. And rates are varied, right? So today you could lend at 18%, tomorrow it could be 22%, next week it could be 17%. So there are a bunch of things we've discussed that come into rate. So I never think that it's useful to give a one-time answer to what rates are, because I could give you an answer today.
And tomorrow it could,
no, not tomorrow,
it could be higher, lesser.
In 2 hours it could go up, it could come down. So rates are very fluid. But I think what we need to unlock are the structural issues that affect rates. So one is we've got to keep inflation in check, right? Because that in itself affects how much government will borrow.
So in few words, what do you think will happen to lending from here on?
I mean, I think the structural challenges still persist. I think that banks are open to do business. And I think that especially with things like the Treasury single account, there's a lot of interest now in doing a lot more, in taking a bit more risk. So if you look at on the fee side, things like COT gone by January. So you find that banks have got to they've got to do a lot more business, right, to provide the same returns they've consistently provided to shareholders. So that will force people to think differently, right?
And that's a lot more work for people like you.
Of course, it's a lot more work for people like us, but that's why that's why we're out doing
so
business. So
definitely we're going to pull you back into the studio to let us know how it is, and because I mean definitely by first quarter of January all these effects would have come into proper play, and we'll see how much of the market that is affecting. So we're hoping that you'll be able to come back then.
Oh, sure thing.
All right, thanks for joining us on the show. That was Akin Oyebode, Stanbic IBTC's Head of SME Bank. Until tomorrow, it's Business Nigeria. I am Tunji Andrews, and keep doing business, Nigeria.